Assalamu alaikum friends. Welcome to question number 3 of AFM Specimen Paper. So I have finished question number 1, which was about exchange rate management, risk management, bond, modified duration, and some ethics. And then I have completed question number 2 as well, which is on net present value and adjusted present value. And now I'm going to do question number 3. This is relating to your accusation and merger. Since a lot of the people have doubt in this question on how to start a question on accusation and merger, well, you have to know that every accusation and merger questions are different. They are not same because you might be asked different methods to value a company. Okay, so this is just one way. So in this, well, I'm not going to read the questions in detail and go through the case study. Make sure that you come prepared for it. Okay, because we are focusing on using Excel, on how to use Excel to perform calculations, because there are lots of calculations here. So we are targeting on those, okay, and not on the writing part so much. We are talking about the calculation part, okay, because writing you can anyway do it. Okay, there you can increase your speed by typing as much words as possible. So the background is that have is acquiring strength, okay, and they have their different issues and all. So one company might be having strength in one thing, the other company might be lacking that thing, you know. So the first question is about synergies. Okay, the requirements. If you see the requirement, first requirement is different types of synergies, and on the above, based on the above scenario, what type of synergies they are, you have to talk about it, and it's for 9 marks. We are not going to go into the answer for this because it's totally writing. Okay, it's your knowledge part. So the three types of synergies are cost synergy, financial synergy, and revenue synergy. You need to talk about it with some examples, of course, and relate to the case study. Okay, so for that you can use this information, the have company's background, and then strength company. Okay, so the first two exhibit can be used for your requirement number A. Coming to requirement number B and C, I'm going to focus on B and C. Okay, B is you have different options. Okay, and under different options, you have to calculate the maximum acquisition premium for both. What are the two methods? One is the excess return. Okay, based on intangible assets, because they invest heavily on intangible assets. So one method is intangible asset. The other one is PE ratio. Okay, so under this both methods we have to find the maximum premium that is payable. For that we need exhibit 3. Okay, the financial information is here, and exhibit 4 is for third requirement under the three types of method, which is the best. Okay, the accusation method, cash or share or cash or a bond, but we'll go to that later in our third requirement. Let's start with our second requirement. Okay, as you can see, we have for the 3 years we have the strength companies earnings before tax, non-current assets, current assets, share capital, reserves, non-current liabilities, and current liabilities. And for have, we only have for 2003. Okay, this they have given for the 3 years. The reason is for you to find the average. Okay, and how do you know which are the two methods? Because the requirements didn't say you. It is by reading exhibit number 3. If you see here, let me zoom this out for you. Okay, I hope it's clear. You can see here the biotechnologies industry pre-tax return on capital employed is currently estimated to be 20% per year. So they are giving you this thing, and also from your here you can see strength uh, strength companies of opinion that most of its value is in intangible assets. You see, it is in intangible assets. So this line says you which method you have to use, and the other one is price earning ratio. So these are the two methods. Okay, these are the two valuation method, how you value a company. You understanding? Because there are many ways to value a company, and you should know all the method. Price earning ratio is there, asset base is there, market base is there, cash flow base is there. For example, free cash flow to equity or free cash flow to firm or dividend valuation model. So many methods. Out of this, maybe one or two will be asked. from your exam. Okay, so make sure that if a price to earning ratio is given, under that do all the questions which are having price to earning ratio. I mean, you value company using PE ratio, how it is, you will find some similarities. If you are taking free cash flow to equity, do all the questions under free cash flow to equity. When it comes to valuation of the company and see the similarity, you will see some similarity. Of course, some differences are there. Those differences will be mostly like missing figure. Like maybe one thing you are not given, you are calculating that thing and filling it. But mostly, the method, if it's used in one question, it will be in the other question also, it will be in the same way only. Okay. For example, price to earning. For that, you need the price, you need the earnings also. That is profit after tax. Those two figure you need for any question. If it's not there, you first have to find those and then value the company using PE ratio. This is just a background I'm giving you about acquisition and merger question before I actually start the question. So let's start with the spreadsheet. Okay, I'm going to keep this in front of me. I can make this small. Okay, by keeping this. So the first method that I'm going to use is the intangible method. Okay, or you can say excess earning method. Maximum premium based on, make sure that you have to label it also. When you're using Excel does not mean just calculation or numbers. Properly you have to write. This is for part B. Uh, you have to double click and part B, maximum premium based on excess earnings method. Okay, let me bold it out. Now, what do you need from here? You have for the 3 years, you have to find the average. You have to find the average pre-tax earning. You have the earnings before tax for the 3 years. Now you have to find the average of it. Okay, average of strength we are talking, not half company. So average means 397, 370, 352. Add all, divide by 3. Okay, so you can write here average pre-tax earnings. Make sure that you always write pre-tax or post-tax. Okay, because it should be understood that tax is not adjusted. Later you have to adjust it for tax. Okay, so when you're writing here, no need to show the numbers and then calculate. Immediately start calculating here. Put the equal sign and in the bracket. Okay, 397 plus 370 plus 352 divide by 3. Did you see? It is 373. Of course, it is in dollar and it is in million. Okay, we'll keep it as dollar million. Okay, so it's understood that this is 373 million dollar. Now we have to find average capital employed. Step by step you have to do. You have to have the patience to do this step by step. You cannot directly jump into the answer. Okay, there is no shortcut for this formula. Like net present value and all, they have a formula there in Excel. You can actually use that formula to find net present value, but not like not for this where you are valuing the company. So average capital employed. So capital employed, okay, directly you're not given the capital employed. You have to find out what is capital employed. Your assets minus your liabilities. So with your non-current asset, you add your current assets and deduct your current liabilities only. Not non-current liabilities, only current liabilities you deduct. Okay. So just Or if you want the other way, you can find the capital employed is simply add your share capital with your reserves and add your non-current liabilities. Add this three things. It should be same only. Should be same. Non-current plus current minus current liabilities, or share capital plus reserves plus non-current liabilities. But let's go by the answer. Okay. This is a long calculation. That means for all the 3 years, you have to do the same thing. All the 3 years. You see, 2001, 2, and 3. So here, first year, I'm just going to show you for 2003 and it will be repeated for the other 2 years. This I'm going to add with this and then deduct 209. Okay. So you keep on doing it, add all the 3 years and then divide by 3. That is the average. So equal to 882 plus 210 minus 209. You have to be very quick in this, okay? Or you can even use a calculator also to do this. Plus 208 minus that minus is current liabilities. Plus 801 plus 198 minus 140, close bracket, and divide by 3. So if you see the answer, it just okay, something went wrong because this should not be the answer. Okay, just we'll not divide it by 3. We'll keep it like this first and then we'll divide this by 3. Okay, if you take that 3, if you take that divided by 3 in the last, what happens? It only divides that 3 by the last bracket because we 3 times we have put the bracket. Okay, that's why you are getting an incorrect answer. So it is this. Okay, you can round this up, go to format cell, take this to 2 decimal place or 1 decimal places, whatever you want. Okay, let us take this to 2 decimal or 1 decimal place, or the whole number also you can take. 869. Okay, now we have to find what? Excess annual premium. Okay, so excess annual premium, how are you going to get? It is simply equal to, okay, this average pre-tax earnings. Okay, this is the formula. Okay, you have to go to calculated intangible value CIV in your textbook and see. Okay, in fact there's a video, so I have made a video on this, so you have to go there and see. Okay, we are following this only. Minus, what is the rate? Average capital employed, the rate is given here. It is 20%. Okay, so 20% into the average capital employed. So minus 20% into this. Okay, so if you see the average return, it's this. Build up format cell. There is another way. If you want to round this up to 1 decimal place, what are you going to do is equal to round. Okay, select this number, comma, and 1. Okay, if you want to round it up to 1 decimal place, after comma it should be 1. If you want to round it up to whole number, comma 0. If you want to round up to 2 decimal places, 2. So it depends on the decimal places you want. That number will change after the comma. You see? This is the quickest method that you can round up. Otherwise, just you can type it also 199.1. After that, it is not adjusted for tax, adjusted for tax. Annual, after tax annual premium. Okay, so after tax annual premium will be what? Simply take that after annual premium and deduct it by tax. So equal to this. Tax is 20%. So after tax it will be 80%. 159.28. Okay, and then we have to find the present value also. Present value of annual premium. You have to assume that it is in perpetuity, okay? Because if it was not, they would have given you some growth rate or something like that. But they give you the cost of capital. So it will be this equal to this divided by your cost of equity, which is here. You see it is 7%. This 7%. Annual cost of capital. So you have to divide it by 7%, which will be 0.07. So hence you can round this up here. Round, you have to write this round, then bracket, then this, then comma 1, because I want to round it to 1 decimal places. See, it is 2275.4. So according to this method, what is the maximum premium? It is this. Let me highlight this cell. Okay, now I'm going to go to the second method, that is PE ratio, maximum premium based on PE ratio. This is very commonly used. Okay, this method does not come very frequently. Okay, it just came maybe one or twice, but PE ratio you always have to be prepared for it because it comes very frequently. PE ratio, profit, free cash flow to equity, free cash flow to firm, dividend valuation model. This valuation model always comes. Okay. So for PE ratio, what do you need? You need the strength company's PE ratio. Okay. You need the strength company. You need, in fact, ratios of all the three companies. What are the three companies? One is have, one is strength, one is a combined company. Okay. But first, let's start with the strength. Sometimes it will be given to you directly. Sometimes you have to calculate and get that amount. Strength. Okay. So strength PE ratio is what? If you see here, they told that. Okay. I'm going to make this big. So strength, okay, the current PE ratio of the biotechnology industry is 16.4 times, and it has been estimated the strength PE ratio is 10 times higher than this. So they give you that is 10 times higher than this 16.4. They didn't give you directly. That means it will be 1.1 into 16.4. So equal to 1.1 because 10 times more, no? Multiply by 16.4. Which is 18.04, or you can simply take 18. Format cell, take this 18. Wait. That's okay. Sometimes it's not happening, then multiple times you have to do and see. Now, what else? You got the strength PE ratio, but that's not enough. Once you get the PE ratio, you also need to find the strength company's profit after tax, because you multiply the PE ratio with profit after tax only, your earnings you need. So strength companies, deal one company at a time. Don't jump in two companies. PAT, profit after tax. You can write short form in the exam, PAT. So you have to go to the financial information and find the profit after tax. You have to go to 2003, okay? This are given to find average for the first method that we already used. Now you don't need 2001 and 2's figure here. So just see the earnings before tax, 397 for strength. So multiply this. We need after tax. Tax is 20%. That means after tax it will be 80% of this. So it will be equal to 397 into 80%, which is 317.6. Okay. Now we already know the PE ratio of have. Okay. So what do we need? We only need have profit after tax. We know profit before tax, but profit after tax we have to find out. The have company, the one who is going to acquire. We need both the companies. Okay. So have's profit after tax will be, you see it is 1980, but before tax. After tax it will be 80% of it. So equal to 1980 into 80, which is 1584. So this were all about PE. Okay. This is profit after tax, trend company's P ratio. What else do you need? You need each company's value individually. Okay, before accusation. Individually, what is the value of strength? Individually, what is the value of have? So, okay. So have company's current value. How do you find the have company's current value? Through the shares and the number of share that is given to you. So if you see here 0.25 and 600, you have to find the number of shares. Okay, this is the price, $600. Okay, $600 million. But if you want to find the number of share, it will be simply 600 divided by 0.25. Okay, or 600 multiplied by 4, which is 2400. So with that 2400, you have to get the share price. It's given to you already, which is 9.24 here. So multiply the share price with the number of share. You can even write also how you got that number of share. Okay, from here 600 divided by 0.25, which is 2400, or you can just write 2400 also. So it will be 2400, the number of share multiplied by share price, which is 9.24. It's given to you. Now you have to find the strength company's current value. So strength company's current value is what? Can you do that for the strength company? Number of share into share price? No. Why? Why? Go to the financial information and see share price. Anywhere the share price is given for strength company? No. You don't have the current share price of company. That means it's not compulsory that you have to use the same methodology of valuation. No. Even for individual company. Okay. You have to see if you have the figure, if you have the number of share and the share price, yes, go ahead. But here you don't have the share price of strength company. So how are you going to value the company? Through PE ratio. We have the PE ratio of strength company before accusation. So use that. And we have their profit after tax also. So we have both the strengths profit after tax as well as PE ratio. So multiply this two and get the current value. So equal to profit after tax multiplied by PE ratio. Okay. Profit after tax multiplied by PE ratio also gives you the value. Okay. Now what else? Combined company value. Okay. So combined company value will be what? The addition of the two company. Okay. Plus the synergy. Isn't it? So here equal to. Okay. You cannot add this to as it is because the PE ratio for the combined company is different. Let us go to that. You see, however, it is thought that PE ratio of the combined company would fall to 14.5 times. So the combined company's ratio is 14.5 times and we have a synergy also of 140. You understanding? So since we have the PE ratio to multiply with, what do we need now for both the company? We need to multiply with the P ratio only. What can be multiplied with the P ratio? Profit after tax. That means we need both the company's profit after tax, add them together, add the synergy, and then multiply by PE ratio. So we want half company's profit after tax, we want strength company's profit after tax, and the synergy, and then multiply by the PE ratio. That is the combined company's PE ratio. So do we have both the company's profit after tax? Yes, we have. Have companies. Add. With this, add the strength company's profit after tax also. With this, add the synergies also. Where's the synergy? 140. Now, keep this in bracket. Multiply by the combined company's P ratio, which is 14.5. You simply cannot add the two company. Okay, if you see, it will be greater than the addition of this two company, which is 29603.2. Okay, so now we have to find the maximum premium. Remember, the question asked for maximum premium. So the maximum premium will be what? It is simply, okay, the combined company minus the addition of this two company. You separately add. So this is your maximum premium. You understanding? With something is wrong somewhere. Just something is wrong somewhere. Wait. It is with the strength company's current value that it went wrong. Okay. Just because this amount is wrong. It's just 18 into 317.6. It should be 5176.8, but this amount is wrong. How come? Okay, anyway, let's go by that. Okay. Method is correct. This minus the addition of the two company. Okay, so that's the maximum premium you got under this. So part B is done. Okay, this you can highlight and just see which one is giving a higher. This is 2275.4 and this is 1697. So the excess, okay, the first method, the excess earnings method is giving a higher premium compared to PE ratio. Okay, now let us go to C. For C we need this, the acquisition proposal we need. HAF has proposed to pay for the acquisition using one of the following three methods. Okay, the requirement asked you calculate the percentage premium per share. Okay, definitely you are going to pay a premium above the value of the company, but what is it in terms of percentage? You have to find out that strength company shareholder will receive under each acquisition payment method and justify with explanations which payment would be most acceptable to them. Okay, so explanation part you are going to explain in the word processor. You are going to type it after you do all the calculations in the Excel, but I am only focused on the Excel part C. I will keep the acquisition proposal also in front of you. One by one we have to deal with. The first one is cash offer. Cash offer 5.72 for each strength company's share. So we first have to find out the strength company's current value per share. We don't know that. We have to find out. Before we go to buy the cash offer, what is the existing share per price for the strength company? We first have to find out. Not only in this question, any question given to you, always find the existing share per price. Okay? For the target company. Because for HAF, we know it's 9.2 for it's given. Strength company, current value per share. We know the number of share, but we don't know the value per share. It's not given. If it was given, then you can take it. Then you don't need to calculate again. Okay, how do you know it? We know the strength company's value, isn't it? It is this 5729.504. So this you have to take here. It is this, okay, divide by number of shares, right? This is the value, and what is the number of share? Number of share we have to find out from here. Go to financial information and go to 2003 and find this 300. So 300 divided by 0.25, which is 1200. So what is it? It is 4.774 or 4. Okay, we'll just round this up. Now we'll round this up to 2 decimal places. 4.77. This is per share, okay? 4.77 per share. Now, maximum premium percentage based on PE ratio. We are finding this in percentage term now. Maximum premium percentage on PE ratio. Based on this PE ratio, there are two methods that we used. So based on PE ratio, it will be what is the maximum premium? It is this. Based on PE ratio, right? Under PE ratio, it's this. So this divide by, sorry. It is this divide by what? This divide by the strength company's value, which is this. Okay, and you can multiply it by 100, or you can go to Form Excel and take the percentage. Okay, which is 29.63 percentage. Now the same thing you have to do, but for the excess earnings method. So maximum premium based on excess earnings method. Excess earning. So it's the same way. You see here, equal to, what is the excess earning? It is this. Divide by same. Divide by the strength company's value only. So this also you can take it from here percentage, which is 39.71%. Now we are going to touch each offer separately. So cash offer, I'm going to pull it out, and it will be in percentage. Everything is in percentage now. So for cash offer, what is it? It is 5.72. Okay, and what is your share price? It is 4.77. So under this, if you want to find out, it will be equal to. Okay, or you can write it here also. Okay, in a cell, just I'm going to do it here. So it's 5.72 minus, you have to find the difference between these two when you're finding in terms of percentage and divide it by this only. Okay, and when you want to take this in percentage, just go here, take it. So it's 19.8%. Okay, now the next. So that's it. This is your answer under cash offer. Now we are going to the second offer, which is cash and share offer. In percentage. So here, let us read. A cash offer of 1.33 for each strength company share plus, this is cash 1.33, plus 1/2 for every 2 strength share. Okay. Please understand, especially the share part when we are exchanging shares, because most of the students make mistakes here. Cash part is still easy. How many shares you are receiving, how many shares you are giving. That, so better you write it somewhere. Okay. 1/2 for every 2 strength. So first you write have. You need have company share price for this to decide the strength company share price. So have share price is already given to you as 9.24. Now you have to find out the strength companies. Strength company we have to find, not the one which we just found out based on this share price, because we are taking 1/2 for every 2. That means divide this by 2. You understanding? It's 2:1 ratio. Sorry, it's the other way around. I'm sorry. So 1:2. This is the ratio. Right? 1/2 for every 2 strength. So if you want to get for one strength per strength, then you have to take half of this. This will become half. You understanding? This is what you are doing it. So that's why we are dividing this by 2. That's why it's very important whether you should know when to multiply, when to divide, whether you have to multiply by 2 or whether you have to divide by 2, because you're not understanding. So you can write ratios like this. Okay. Next, cash payment. So this is the share payment part. Cash payment is what is it? 1.33. Okay. So now total, just add both equal to sum. This is cash and this is share. You just need to add this too, which is 5.95. Okay. But it's not enough to find. You have to find in terms of percentage. So in percentage time, if you want to find out, it will be equal to, okay, this minus always what you have got here, strength company's current value per share. It is not this 4.62. This we found out only to get this price. Okay, you have to add this with the cash. But when we are taking in terms of percentage to find the premium, we always have to take this. Okay, so this divided by this only. So take it in terms of percentage, 2 decimal place, it is 24.62. So I can highlight. Now we are left with the third offer, the last offer. So if you compare the two, Which one is giving you the greater return? Cash and share offer, right? The third one is cash and bond offer. Under this, okay, again we'll go to acquisition proposal and just see a cash offer of 1.2 for each strength company share. So this is only for cash part, 1.25 plus $100 3% convertible bond for every $5 nominal value. So $100 for every $5 nominal value of strength company share. In 6 years, the bond can be converted into 12 half shares or redeemed at nominal value. Most of you must have got confused and didn't understand what to do, right? You have to break this into small pieces of information and then do it. You cannot go do it in one go. So each share has a nominal value of 0.25. You see, each share has a nominal value of 0.25. So for 5, they told the nominal value is 5. So for 5, you have to find out what is the number of share first of all. We don't know the number of share. Okay. So number of share will be simply for $5 equal to 5 divided by 0.25, which is 20. So number of shares, 20 shares. Okay. After that, what is the bond value? You have to find the bond value because it's cash and bond offer. So bond price they have given already 100. And what is the number of share divided by 20? So it will be 5 per share. Okay. This you are doing to find per share, 5 per share, and cash because if you see here we have cash of 1.2 for each 10 share. So we have cash per share. So same here, bond also we have to find in terms of per share. Everything, whatever you're doing per share. You understanding? You have to bring it in terms of per share, not the total value. So the cash payment is what? Cash payment is this. This is 1.25. So simply here also add both. You have the bond price per share and cash also. 5 and 1.25, which is 6.25. So this is 6.25 per share. Now the premium percentage will be okay. Again it will be this minus this only. The amount that you have got. Divide by that amount only. So I am going to go to percentage. So it's 30.90 percentage, right? So now tell me which one is giving the highest percentage. 30.9, 24.62 and 19.8. You see, cash and bond offer is giving you the highest premium percentage. So now comes the discussion part, which you have to go to the word process and discuss. Let me show you the answer. And we are done. So you see this first one is for 9 marks and it is talking about all the 3 types of synergies, and 3 types of synergies you can talk in 3 different paragraphs. And you have to relate this to the case as well. Giving examples of revenue, cost and financial synergies. Okay. So this you can use MS Word, no need to do any calculation. Second part, you see so many calculation line by line. This you need to use Excel. And you have to label it also, which method you are using. So strength, first we are finding their current value per share, their maximum based on P and excess earning, and then we are finding using 3 different offer. Okay. So many calculations are here. You need to be very quick in this. And then you are writing all this under Word. And if you see here, In between, they're using numbers also. You have to make reference to the number that you have calculated. Okay. And then ultimately, so basically you are giving advantages and disadvantages of all the three methods, and then you are coming to a conclusion. It could be anything. You can say cash of a share, cash and share, or cash and bond. It's your decision. Okay. You will be getting marks if you're able to justify. But the answer, let me tell you the answer which they have given us. They have chosen cash and bond offer because it is giving the highest payment. So the shareholders are likely to accept that. Okay. And if also the bond, if it is converted to share, if it increases in value share prices, it's again beneficial. So in both ways, it's beneficial. Okay. That's their conclusion, the marking scheme. But your conclusion can be different. So that's it for question number 3, and we have finished it. But before that, let me show you the marking guidelines for question number 3. Distinguish between different types of synergies 1 to 2 marks. Financial 2 to 3. Cost synergy 1 to 2. Revenue 3 to 4. Revenue has more, in fact, because in your case study, examples of revenue synergies are more. And concluding comments also 1 to 2. Coming to part B. 1 mark for each. Average earning and capital employed. After tax annual premium. Present value of premium. Have and strength company's value. Combined company and PE method. Value created based on PE method. Coming to part C, which is for 10 marks. 1 mark for strength value per share. Cash of a premium only 1. Cash and share 2. Cash and bond 2. And explanation and justification uses 4 to 5 marks. So you should be able to explain and justify more, in fact. More than the calculation also, it carries more marks. Okay. So that's it, guys. And this was my last question for September 2021. And best of luck and make me proud. Till then, thank you. Take care.